Welcome back to Intrendias. I'm just looking at Comcast CMCSA stock earnings coming out Thursday morning. So I'm a tad late to the game here for the uploading and the review of this video. But I figured I'd do something a bit more casual, kind of just me going through some of the financial pieces that I'm looking at. Um, I have a call option on Comcast prior to market open, prior to Thursday, recording this on Wednesday, Wednesday evening. Particularly, these financial ratios look pretty favorable for Comcast, starting off with the EV to EBITDA, comparing it to some similar industries, similar companies like Disney and Netflix, obviously, for the streaming services and Disney's own parks. Remembering that Comcast owns Universal Studios, Universal Film, and not only that, but also the cable part. So that's why I also have T-Mobile, Paramount, Charter, Verizon. I came into this trade thinking that Comcast might be the best of both worlds, where Disney's doing great with the theme parks. Their quarter two revenue, from what I recall, much of Disney's performance was coming from their theme parks, not from Disney Plus. And then on the flip side, you have a company like Netflix, where in their most recent quarter, their numbers were great. The only issue and the only reason why the stock had a beat down was because they're not going to share uh, quarter end users on their reporting anymore. So, um, in terms of when I say best of both worlds, Comcast has Peacock, it has the streaming service. They're actually able to produce movies that haven't flopped. For example, Comcast, they had Kung Fu Panda 4 with a $85 million budget, and so far, the worldwide um, box office has been around 400 plus million, half of Dune, but still second place in worldwide box office for 2024. Box office 400 million compared to the budget of 85 million. So they're able to turn a movie around. Unlike Disney, Disney's been having a lot of issue with having flop after flop, at least in the box office department. So I saw Comcast as having the best of both worlds. You got the Peacock, the streaming, and the Universal Parks. The only downward pressure would be the cable, the the old school TV, right? So I know we have a diverse pool of stocks here, but Comcast EV to EBITDA is lower compared to this basket of stocks where the average is 9.1. I took Paramount out of the average just because it's an outlier. And we're sitting at 9.1 average EV to EBITDA for this basket of stocks. And clearly Comcast is, quote, undervalued according to this comparison, with Disney and Netflix taking the lead. Netflix, I think it makes sense that investors are wanting to pay a premium for that. Um, Comparing to its operating performance, Netflix has been great. I'm hoping Comcast can show me similar results tomorrow morning. Um, Price to free cash flow. This one's great for Comcast relative to this basket of stocks. 75 is the average. Comcast coming in 61 price to free cash flow. Uh, Basically, this is assessing how much investors are willing to pay for each dollar of free cash flow generated from the company. And we're seeing that investors are paying a huge premium for especially Disney, but also Netflix. Disney's sitting at 233, Netflix is at 111. So I feel like Comcast has some room to grow here um, with their market cap. I think Comcast, based on so far EBITDA and price to free cash flow, we're seeing potential growth here. Room for the market cap to grow based on these these ratios. Price to earnings, 49 for Comcast. Disney and Netflix at a premium. The average is 43. Comcast is pretty much comparable, 49 greater than 43 though. And then price to share, Comcast sits at 5, average 7, Netflix premium 25. The return on ratios, I think Comcast could be doing a bit better here. I would think this is the the pitfall for the Comcast call. Clearly, Netflix is outperforming. They're able to return on their capital 27%, return on assets 13%, double digits compared to Comcast, um, even blowing Disney out of the water. Um, so I think the Netflix going down recently in that most recent quarter, I think it'll pick back up, honestly. Return on equity, I'd like to see it at 20%. We're at 15 for Comcast. It's like, okay, I'd like to see it better. The return ratios could be a lot better for Comcast. This is like my my current pitfall with Comcast, but love and hate relationship. What are you going to do? The EBITDA price forecast or price free cash flow ratios, love those. That's what I'm sticking to. And then love the free cash flow. Finally, we're looking at the historic price to free cash flow in this table down below right here. Um, Basically, what I'm doing here is that I'm noticing some seasonality with March 31st typically being a higher free cash flow quarter. So if we were to just take the average, just to attempt and predict what the free cash flow would be when earnings come out, based on the current market cap, we would actually be lower than the average price to free cash flow. Let's assume that free cash flow comes out March for quarter one in the earnings Thursday morning, and free cash flow stated to be 4.8 billion. This is the average of the preceding the last two, March 31st, last first quarters. That average comes out to 4.8 billion. Assuming that, and based on this free cash or based on this market cap of 159, um, relative to the average, Comcast is undervalued based on the price to free cash flow and the average price to free cash flow of Comcast. The average sits at 44.5, and currently we're sitting at 32, assuming 4.8 billion in free cash flow. So just based on the market cap alone, the seasonality of quarter one, March, typically being higher in free cash flow, this could also signal that the market cap has some room to grow relative to the free cash flow. So I know I said a lot of free cash flow, kind of rambled a bit, but I still wanted to share my thoughts and what I was looking at with Comcast. Just curious what you guys think about Comcast as well. Um, I hope you enjoyed this video of Intrendias. Let me know if you guys would like to see more of these financial analysis, these ratios analyses. Um, Seems like you guys have been enjoying the coding tutorials, which is awesome. I enjoy coding, and being able to help others code is definitely awesome, and definitely something I would love to keep doing. So um, appreciate y'all's time, appreciate y'all hanging out, and hopefully I wake up tomorrow morning and Comcast is through the roof. So hope you guys have a good one. What do you think about Comcast? What do you think about Netflix dropping most recently? And what do you think about Disney? Because I mean, I know Disney dropped a lot recently, but there's a huge premium on Disney compared to the other stocks in this basket. So hope you guys have a good one. Thank you for watching, and I'll see you guys in the next one.